Death and taxes?
Yes.
Death and taxes?
Yes.
Ben Franklin and Brad Pitt noted that there's only two assured things in life: death and taxes. In all seriousness, I hope that this video doesn't go viral, because if it does, then something sad has happened, and for that I want to express my condolences to you for your loss. I recently watched a video course on the Black Death from The Great Courses. They're not a sponsor, I just like their products. The thing I took away from it was the administration that the living have to deal with, also while mourning their family member. While the forms have changed over the centuries since then, the basic process hasn't, and there are penalties if you or your surviving family member will have to deal with if it's not done right. I'll tell you a story about this after the animation thing. I usually start off by welcoming my community of people. Today, however, I want to welcome anyone that's going through a loss in their family. Please accept my sympathy and condolences, and may the memory of your friend or family member be a blessing for you always. Today on Just the Tax, we'll take a look at some tips to help you or your surviving spouse and children get through this very difficult time. Here's a story about a person whose mother passed and they were very distraught and they went into mourning, as any of us would be. It's very natural to get upset when you lose your parents. Right, so this person, their mother died, and they were named the personal representative of her mother's estate, and she didn't do anything. She didn't process anything, didn't file any returns, she didn't administer the estate. She was broken up. And again, normal thing, but what happened was the IRS started sending notices, the notices weren't answered, and eventually they started going after this person for $50,000. This is a case where a person didn't know any better, and it cost them a lot of money, and it's all while they're trying to grieve and mourn. So I'm hoping that by you watching this video, that won't be you. Look, we all die. No one gets off this rock alive, except maybe Elon or Jeff. But for the rest of us mere mortals, we gotta make plans. Not for us, but for those that come after us, our spouses, our children, or grandchildren. Before we go any further, quick disclaimer, this video is for educational purposes only. I'm not selling you anything, and I will only ask for your like, share, and subscribe if you find this video helpful to you or someone you know. Okay, so let's get into the details here. In the year that someone passes, a final tax return has to be filed. Income and deductions are shown as normal from January 1st through the date of death. This is called a decedent's final 1040. If there's a refund due, the decedent's personal representative, your adult child if you're lucky enough to make it to old age, needs to attach a Form 1310 and a letter of administration to this return. The letter of administration is an official document from the court that appoints you or your surviving family member to wind up your affairs. It's you if you're the personal representative for someone you know, and it's your surviving family member if they're handling your affairs after you've passed. This process, by the way, is centuries old. Now, if you have some assets like CDs or savings bonds or investments in a trading account or rental property, and those assets continue to earn income after you die, then another form needs to be filed. This form reports income and certain expenses from the date of death to the date that your estate is distributed and finalized. It's called a Form 1041, and the tax brackets are small, meaning that income on this period of time is highly taxed. In other words, the government is incentivizing people to close things down quickly. Note that this is not the same thing as the so-called death tax. We'll hit that next. Okay, the so-called death tax, it's really technically called the estate tax. As of now, the point at which an estate becomes taxable is over $12 million. Meaning, if you add up all the things you own, subtract out any mortgages, and as long as that figure is below 12 million, there's no federal tax. Note the difference there, federal tax. And here are some things to know, right? First of all, some of the states have lower thresholds. For example, Massachusetts has a state tax at $1 million. The tax law that set this threshold at that level is set to expire for tax year 2026. And we'll go back to what it was before, $5 million, which is still a lot, but well, 5 million ain't what it used to be, I guess, right? Now look, I don't know what's going to happen with the law, contingent on politics, but I do know that this level has never decreased in the entire history of the estate tax. However, even if your estate never gets to that level, there are still reasons to file an estate tax return, a Form 706. And mainly that's so the first spouse to die can pass on their unused exemption to the surviving spouse. There's a lot more to this than can be covered in this one video. We're trying to keep it high level. But know this, the main point of the estate tax is to prevent the kind of aristocracy from forming that locked Europe into its economic stagnation and centuries of war. Looking around our society today, it's clearly working perfectly. Seriously though, it's not a death tax. Always question the motives of those calling this thing unfair. Having said that, There are ways to not pay more than you owe, and that's why good planning is so important. So the most important thing, if you take nothing else out of this video, the best thing you can do if you find yourself serving as a personal representative for a loved one or even a friend is to engage with an attorney and a CPA that specializes in this area of practice. And make sure that the attorney and CPA coordinate their work together. Or talk to an estate attorney and CPA to plan for your own affairs today and teach your children about financial literacy so they'll know how to manage things after you've gone. The one thing though, if you get a letter from the IRS, open it. Okay, so that's the video. I won't say that I hope you enjoyed it, but I hope that it brought some comfort to you and a way forward in dark times. And remember, the steps you take today can help save your spouse and children and grandchildren a lot of headaches when they're already dealing with the heartache of losing you.